The U.S. military carried out massive precision strikes on the 3 key nuclear facilities in the Iranian regime.
We are not dragging America into a war, and we are leaving it to the decision of the head of, the President of the United States and his team.
The bombing of Iranian nuclear facilities by the United States marks a perilous turn in a region that is already reeling.
It's 5 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know on this Monday morning. Iran vows to retaliate and keeps up strikes on Israel following the U.S. attack on its nuclear facilities. The world braces for what's next as Washington issues a worldwide caution for Americans. And the spike in oil quickly fades. Traders keep their eye on potential disruptions in the Strait of Hormuz. There is only one story this morning for both markets and the greater world, with the potential range of outcomes unknown at this moment. But how much will we really trade that? Oil is a remarkable asset to look at this morning. Immediately when it opened in the Asia trade, we were higher by nearly 6%. Look at what's happened in the hours since. We quickly fade. Indeed, we dropped at one point. We are little change on the price of oil, just given that the reaction in stocks is likewise muted. Any sort of sell-off we've seen has faded, and we are buying this morning, up 0.2 for both the S&P and NASDAQ 100 future session. Terry Haynes at Pangea says that the markets are misplaced with this optimism. Mike Wilson over at Morgan Stanley, though, says that any geopolitical dips are quickly faded. But again, we are not even dipping this morning. Likewise, there is no bid into the haven asset of treasuries. You could say potentially they're worried about inflation, but hey, oil isn't even moving this morning. Still, we're about a basis point higher on the front end of the curve. Your 10-year yields at 4.39. Your 30-year yields higher by just 2 basis points. Let's look underneath the surface, get you some stocks to watch this morning. With that is Joe Easton. Good morning, Joe.
Morning, Danny. So we are seeing some moves higher in the defence stocks in the early trading this morning. As you say, a lot of the broader moves have actually started to fade, but we are seeing a bit of a move higher in Lockheed Martin this morning. Also, Raytheon RTX getting a boost, but less than 1%. So really not the huge boost that you might expect in defence stocks, given the news we got at the weekend. The other sector, of course, that we're looking at is oil, given the movements we've seen in crude. But as Danny was explaining, the moves haven't been as exaggerated as we expected. We did see oil up around 5% overnight, coming back down into negative territory. So we've got Chevron, ExxonMobil on the radar, but again, moves of only around 1%. And finally, airlines. This is where we've seen the weakness today in Europe, because we have seen airlines warning of potentially cancelling some routes into parts of the Middle East, given the disruption there. So keep an eye on the airlines later. American Airlines, United, Delta, all of those likely to be lower following European peers in the red. And as usual, check out the Before the Bell opening wrap for a summary of all these moves and more on the terminal. Danny.
Joe, a great roundup. We'll also speak with you later in this hour. Also coming up this hour, we will be speaking with the former Israeli ambassador to the US, Michael Oren. Andrew Sheets of Morgan Stanley and Kathy Jones of Charles Schwab will join us on what so far has been a limited market impact. Meanwhile, the world is bracing for Iran's response to U.S. strikes, while Israel's President Isaac Herzog says it's not asking the U.S. to go to war.
We made clear throughout that we are not dragging America into a war, and we are leaving it to the decision of the head of, the President of the United States and his team, because it had to do with America's national security interest, period.
Our team coverage starts right now. Joining us is Bloomberg's Tyler Kendall in Washington, D.C., and Bloomberg's Dan Williams in Jerusalem. Dan, let me start with you. What do we understand about the extent of damage that's been done from these attacks, and what that means on where we go from here?
Well, to judge by the statements made by the Trump administration, the president himself, the defense secretary, total obliteration of the nuclear program, total success of that bombing run. that took the world by surprise over the weekend. The Israelis have given a more nuanced assessment. They've been talking about a great deal of damage, but say there's really no knowing until the BDA, the Battle Damage Assessment, can be conducted, and that will take a number of days. The Israelis are being circumspect about this. Potentially the Americans have a different approach, given that they would like this to be a knockout blow, an in and out one-time engagement by US forces in a foreign war. So we will see in the coming hours and days whether there'll be a clearer picture. It would appear that satellite photographs only have a limited value, given that at the outset, the Fordo plant was underground. That's where it was deliberately designed and built to withstand conventional military attacks. So presumably, one would have to inspect it underground to know the degree to which it was affected or damaged or destroyed by this attack.
Tyler, Dan was hinting at it there, what we've heard from the U.S. saying that they're claiming more extensive damage, at least at this point. What does that mean about further and potential U.S. involvement at this point?
Yeah, hey, Danny, good morning. Well, President Trump himself has threatened that if Iran doesn't come to the negotiating table here when it comes to their nuclear program, then he could threaten even further action. And perhaps as we get additional details about the full extent of the damage, that could also spur U.S. involvement further. Now, we should say that we heard from the Vice President J.D. Vance yesterday, who did say that the U.S. feels at this point that they have significantly set back Iran's nuclear program, but also did signal that Iran still holds on to a stockpile of enriched uranium, sort of indicating there that there could potentially be further U.S. action moving forward. The International Atomic Energy Agency yesterday briefed the UN Security Council and said that at this point, their inspectors aren't able to get into that site to survey the full extent of the damage. So we're watching very closely here how the Trump administration's rhetoric could heighten on this as we wait to see if Iran ends up retaliating in a way that could move the U.S. further along.
Well, to that point, and what potential Iranian retaliation could look like, Secretary of State Marco Rubio spoke to CNN on the possible closure of the Strait of Hormuz. Let's take a listen to that.
Well, I encourage the Chinese government in Beijing to call them about that, because they heavily depend on the Straits of Hormuz for their oil. If they do that, it'll be another terrible mistake. It's economic suicide for them if they do it. And we retain options to deal with that. But other countries should be looking at that as well. It would hurt other countries' economies a lot worse than ours.
Dan, what does Iran backed into a corner and possible retaliation look like?
Well, its options appear to be limited. As the Secretary of State suggested, a retaliation has to serve the interests of a state retaliating, perhaps not exacerbate the situation it's in. There has to be an element of escalation control here, escalation management. We have seen more limited, indirect, if you like, retaliation in Iran now 4 times, attacking Israel today with long-range missile launches. Each volley smaller than what we saw previously. One volley was actually just one missile. That was early in the morning before dawn. And then 3 volleys, about 5 missiles in each. And I think what they're trying to do now is husband what remains of their arsenal for maximum effect. So we have seen retaliation there. The Strait of Hormuz would appear to be a game changer because it would affect the global economy. It would also affect the Iranian economy and Iranian interests. They don't seem to have much to hand. It would appear for now, especially as Israel is continuing its own attacks, that two-way war, the bilateral between Israel and Iran, will continue apace, while the Iranians weigh if and when to act in a manner that would directly affect U.S. interests.
Tyler, Dan, thank you so much for joining us. We will catch up with you later in the hour. Tyler Kendall in Washington and Dan Williams in Jerusalem. I'm pleased to say that joining the program now is former Israeli ambassador to the U.S., Michael Oren. Ambassador, great to have you this morning. Thank you for joining us. Now that we have U.S. involvement, the actions over the weekend, how drastically does that change the course of this war?
Well, good to be with you, Danny. It totally changed the course of the war. It changes more than the course of the war. It changes the course of Middle Eastern and potentially even global history. The people in Beijing will be thinking twice before they ever make a move to conquer or attack Taiwan. And the Russians will be thinking differently also. The message of American steadfastness and willingness to project and use power, I think, has been unequivocal here. For the Middle East, potentially, the war could end with the Iranians not just giving up the right to enrich, as they call it, their nuclear facilities, but also ceasing to be the world's leading state sponsor of terror, the financiers and trainers of Hezbollah, Hamas, and the Houthis, complicit in the massacre of hundreds of thousands of people in the Middle East and thousands of Americans, just too. So everything could change as a result of America's military involvement.
Ambassador, if I can jump in, because a less cheery interpretation could be that however successful the attack, the lesson that will be learned from governments around the world is that a working nuclear arsenal protects you from being bombed or invaded. A lesson learned by Libya, Ukraine.
It's the nature of our bandwidth.
Yes. No, please. I'd love your thoughts on that being the risk and the potential outcome more globally from this.
Okay, there are certainly risks. And if Iran decides to shoot at American soldiers, there are about 40,000 American troops in the Middle Eastern area. If it decides to close the Straits of Hormuz, and we just heard Secretary of State Rubio saying that would be economic suicide and a massively bad decision by Iran, but they could do that. The Iranian regime, with its back up to the wall, could actually want the United States to get more deeply bogged down in an Iranian quagmire in order to deepen the divisions within the American electorate, certainly within the Republican Party, where there are still people who still strenuously oppose President Trump's decision. That would be a desperate move by the Iranians. And we have heard from Dan Williams, your reporter, that though the missile attacks continue here, they're getting smaller and smaller. Last year, there were 300 missiles per volley. We went down in this round to 200 to 100 to 60 to 40. And this morning, only one rocket fired during the night. So, yes, they are trying to husband their missiles. So they are in a difficult situation. The fact of the matter is, at the end of this, whether the Iranians decide to strike at American bases or to close the Straits of Hormuz, whatever they decide, this war is going to end at a negotiating table. And America's position at that negotiation table will be absolutely faithful. It won't even be pivotal, it'll be faithful.
Michael, how important is it that Israel ceases their attacks on Israel to get that negotiation? Iran, before this weekend, had been very clear that they wouldn't negotiate while attacks were still ongoing. Is this a time for pause in negotiation?
Well, interesting question, Danny, because last night elements of the Israeli government indicated that Israel would consider a ceasefire if the Iranians would come back to the negotiating table and negotiate the dismantling of their nuclear facilities, those which haven't already been dismantled, and that they would forgo the right to enrich, which was the American position. So I think the United States and Israel are in lockstep on that. Some of the messages coming out of Washington are inconsistent. One hand, President Trump calling for the overthrow of the Iranian regime. Other messages coming out and saying America is interested in going back to negotiations. But here we have the Israeli side and the American side saying negotiations could resume, but only on the condition that Iran is, first of all, going to stop shooting at Israel, and Iran is going to consider seriously the American and Israeli demand for the dismantling of nuclear facilities and the end of enrichment on Iranian soil.
Ambassador, I'm curious, just given what you're saying, on your take on who really is the controlling force here. Senator Chris Van Hollen in the U.S. said it's clear that President Trump has been outmaneuvered by Prime Minister Netanyahu because it was Trump who very clearly had been saying that he wanted to make a deal, not war. Is the senator correct that this is Israel outmaneuvering the U.S. and forcing their hand in attacking Iran?
Absolutely not. Absolutely not. I've been involved in the Iranian issue and the U.S.'s relationship around the Iranian issue for more than 20 years now. And I know how these discussions proceed. This is an American interest, Danny. It just simply is. You heard our President Isaac Herzog say that earlier, but I can say this even more emphatically. The president understood that the Iranian nuclear program posed a threat, not just to the United States regionally, but globally. It changes the entire global balance of power. The United States faces 4 major adversaries in the world. They're all allied. That's Russia, China, North Korea, and Iran. 3 of them have nuclear weapons. The 4th, getting nuclear weapons, would simply upset the entire global balance of power. And the president understood, and he's articulated this previously, that the Iranians have a long history of attacking Americans, of killing Americans, beginning with the horrific bombing of the Marines barracks in Beirut in 1983, the bombing of the American embassy in Beirut, killing Americans throughout the Middle East, and even in the last 2 years, attacking American bases in the Middle East dozens of times and wounding hundreds of American soldiers, killing several. and attempting to assassinate the President of the United States, as well as a former national security advisor and a former Secretary of Defense on American soil. This is a country that cannot have nuclear power. He understands that. It's a very simple calculus. This is not an Israeli interest. This is an American interest, and it's a paramount American interest. And the president, yes, he wants to end wars. Of course he wants to end wars, and he sees himself as a peacemaker. And I sincerely believe he could be the greatest peacemaker of the 21st century if, as a result of this war, we get peace with Lebanon, Israel gets peace with Syria, and maybe in peace with Iran.
Ambassador, I just want to end with this, because you had put out on X that dozens of Israeli journalists and public figures had purportedly received a letter from you asking for sensitive information that wasn't from you. Is it your understanding that you yourself have come under as a target, at least, of deception and impersonation from the Iranians?
Yeah, it's not the first time, Danny. And yes, we had to deal with this. And, in a sort of odd way, it's kind of complimentary that the Iranians feel that they can utilize my name to try to compromise Israeli security and garner sensitive information. But of course, it's not going to work. And it actually indicates the pathetic state of the Iranian leadership, where they have to resort to this type of rather transparent and really sad trick.
Ambassador, we really appreciate your time this morning. Little issues with your video, but I'm so happy we were able to get you on. Michael Oren, former Israeli ambassador to the U.S. Now let's get you some other top stories trending on the terminal this morning. Ukrainian President Vladimir Zelensky says that he will be visiting the UK today. Zelensky made the announcement following an overnight Russian attack on Kyiv that killed at least 6 people. In a post on X, Zelensky said he will be negotiating new and powerful steps to increase pressure on Russia. Bank of New York Mellon approached Northern Trust last week, expressing interest in a possible merger. The Journal reporting that the chief executives had at least one conversation, though the banks did not discuss a specific offer. Representatives of BNY and Northern Trust both declined to comment. And Tesla launched its long-awaited driverless taxi service Sunday, but only to a few riders. The first robo-taxi trips were limited to a narrow portion of Tesla's hometown, Austin, with an employee seated in each vehicle monitoring the journey. Initial riders featured investors and social media influencers who live-streamed their trips. Coming up, we'll get a market reaction from Andrew Sheets of Morgan Stanley on the risks of escalation in the Middle East. That's next on your brief.
It is in energy prices, yes. Of course, there could be secondary and tertiary impact. Let's say there is more turbulence that goes into hitting growth prospects of large economies, and then you have a trigger impact in a downward revision of prospects for global growth.
IMF Managing Director Kristalina Georgieva on the broader impact of U.S. strikes on Iran. Meanwhile, Morgan Stanley's Andrew Sheets writes, quote, plenty of reasons to worry. Spreads are tight, growth is slowing, and geopolitical uncertainty remains high. Given this, many credit investors are cautious and waiting for better levels. Pleased to say that Andrew joins us now. Andrew, the here and the now this morning, if you were to look at markets, you'd have no idea that there was a major geopolitical event that happened over the weekend. I'd love to get your initial reaction to the lack of reaction today.
Yeah, thanks, Danny. Good morning. So, look, I think there are some kind of short-term and longer-term issues the markets are parsing here. But, I think in the near term, I think markets are understandably very focused on oil prices as the main channel with which this conflict would impact the broader global economy, would impact a broader sense of companies. And the fact that oil prices are well behaved, the fact that the Strait of Hormuz still seems to be operating as normal. The fact that oil markets are quite oversupplied in our view, kind of looking out over the next several quarters, those are all, I think, helpful factors, in addition to the fact that, I think if we just kind of factually look back at a lot of geopolitical events over the last 50 years, they often don't have maybe as large of a market impact as one would expect, or as kind of negative a market impact as one would expect. So yes, there are increased long-term uncertainties by the action over the weekend. We can get into those, but I do think credit markets are still facing pretty favorable technical forces. Yields are still attractive, And, I think the history of some of these geopolitical actions is they're just often not a reliable catalyst to disrupt those factors in the near term.
Yeah, something your equity analyst, Mike Wilson, had been talking about this morning as well. Andrew, if we do have a scenario where the Strait of Hormuz is closed or severely disrupted, which carries 20% of the world's oil consumption on a daily basis, if that happens, oil spikes, goes into triple digits, how do you view what the other reaction from credit from this bond market would be?
Yeah, so that would be a very serious bear case, and that's the way our commodity strategists are thinking about it. That would be a scenario where $130 on oil would be possible, but you would need that sustained significant disruption, given that supply elsewhere in the world is pretty healthy. And I think that's also important because, as my colleague Michael Wilson and his team on our U.S. equity strategy side have shown, you really often kind of need a 75% year-over-year increase in oil to get the really kind of large negative market reaction shocks. As we're sitting here today, oil is basically unchanged, year over year. So you need something significantly more serious than what we've seen so far. So in that closure of the Strait scenario, we think kind of $130 on oil is a possible kind of short-term reaction. But we do think it's important to note that given how well supplied the oil market is, more minor disruptions are not going to have as significant of an impact on the oil price.
Well, perhaps one of the bigger drivers in recent weeks for the bond market, for markets in general, has been the growing deficit and the One Beautiful Bill Act making its way through D.C. But Andrew, if this is a U.S. that shifts to a war footing, even if there is limited disruption to oil markets, surely that is something that just increases the deficit. Do budget concerns come more sharply into focus after this weekend?
Well, I think with the budget, there are a couple of factors that are on our minds, and I think as they relate both to the broader market and credit specifically, this is a bill that on a number of independent estimates and on our own forecasts is increasing the deficit from already relatively large levels. And I think the challenges of this bill, I think when you're modeling it, is that some of the tax cuts, which are stated to be temporary, happen quickly, or start quickly. And the spending cuts, which will be modeled to be permanent, happen much later. So there is a timing element as well in the bill that is deficit increasing and would potentially increase supply. So you do have this really notable contrast between already larger levels of government borrowing that are slated to increase and more modest levels of corporate borrowing that could decrease or could be less on a net basis year over year because companies are looking at greater uncertainty, they're looking at higher interest rates, and they might see less reason to borrow. So that contrast in borrowing between the government side and the credit side, that is, I think, an important theme. And again, another reason why we think probably spreads do stay kind of frustratingly low over the next several months as you see this division.
Well, you also, as we started out, Andrew, with your thoughts this morning, that it's not just the companies themselves that are cautious, it is credit investors themselves. I mean, next week, July brings with it a whole host of risks between what's going to unfold in the Middle East, between the deadline for the One Beautiful Bill, the deadline for reciprocal tariffs. What gets investors off the sidelines, Andrew, because there seems to be no let up in uncertainty?
Yeah, so, I think there are a couple of factors. I mean, one would be that you do see, some time pass after this weekend's events, and there is no further escalation or no further action, say, from the U.S. Maybe that is helpful for letting investors think that this issue might now be somewhat on the back burner for the near term. You have historically very good credit returns in July. If we go back over the last 15 years, July has been the best month for total returns in corporate credit in the U.S. and Europe, and it's not even close to the next month. And earnings season could be okay. So I think we're actually a little more worried about August and September. By that point, positioning could be higher. Seasonality is not as helpful.
All right, Andrew, thank you so much for joining us this morning. A lot to work through. Andrew Sheets, Global Head of Corporate Credit Research at Morgan Stanley. Coming up, we'll get more on that, let's say, lack of market reaction. We'll speak with Kathy Jones of Charles Schwab's next on Bloomberg.
The U.S. military carried out massive precision strikes on the 3 key nuclear facilities in the Iranian regime.
We are not dragging America into a war, and we are leaving it to the decision of the head of, the President of the United States and his team.
The bombing of Iranian nuclear facilities by the United States marks a perilous turn in a region that is already reeling.
It's 5:30 a.m. in New York City. Good morning, I'm Danny Berger with your Bloomberg Brief. Here's what you need to know on this Monday morning. Iran vows to retaliate and keeps up strikes on Israel following the U.S. attacks on its nuclear facilities. The world braces for what's next as Washington issues a worldwide caution for Americans. And the spike in oil fades. Traders keep their eye on potential disruption in the Strait of Hormuz. There's only one story in markets and indeed the broader world today, with a range of possible outcomes barely reflected in markets this morning. At one point when oil opened, Brent crude was up nearly 6%. We turned negative earlier this morning. We are slightly rising again, up just about 1/3%. The reaction in risk markets similarly muted. Futures started out negative. They've pushed positive again, both up for the NASDAQ and S&P, up 0.2%. We're just speaking with Andrew Sheets of Morgan Stanley, who noted that historically the responses to geopolitics is limited and reverses. Hence, you got that this morning. But Pangaea's Terry Haynes saying that the fragile market optimism is misplaced. Well, certainly, given that fragile optimism, you're not getting a bid into bonds. Slightly unchanged to losses this morning for your bond market, 438 on your 10-year yield, higher by a basis point on the long end of the curve. We are back at 4.9%. So let's get you some stocks to watch. With that is Joe Easton. Hey, Joe.
Hey, Danny. So as you say, not huge moves in reaction to this news at the weekend, but one space we are seeing a little gain higher is in the defence stocks today. We're seeing Lockheed Martin, Raytheon all gaining close to 1% in the pre-market trading. Now, this news of the attack on Iran does come on the backdrop of the NATO summit this week, where we are seeing pressure for countries to hit the target on spending that's been set by Trump. So this kind of taking the effect away from that, but we are seeing a move higher in those stocks very slightly at the moment. Then in terms of oil, with crude coming back down, the gains in those oil stocks pre-market are actually tempering a little bit. Chevron now only up 0.9%. ExxonMobil 1.3%. Crude was up 5% overnight, but actually into negative territory very recently, as Danny was mentioning earlier. So keep an eye on the oil stocks as we move forward. And then the airlines. This seems to be more about the disruptions to routes. We did see overnight British Airways, Singaporean Airlines, Qatar as well, announcing some cancellations heading into the Persian Gulf. So we are seeing airline stocks heading lower today. American Airlines, United Airlines, as well as Delta was a little bit softer as well. Keep an eye on the airline stocks this morning, Danny.
Joe, thank you very much. Excellent work this morning. Now, the main story, back to it. Israel's President Isaac Herzog says Israel is not asking the U.S. to go to war as the world braces for response from Iran.
We made clear throughout that we are not dragging America into a war, and we are leaving it to the decision of the head of, the President of the United States and his team, because it had to do with America's national security interest, period.
We go back to our team coverage with Bloomberg's Tyler Kendall in Washington, D.C., and Dan Williams in Jerusalem. Tyler, what dictates further and possible U.S. response from here?
Yeah, hey, Danny. Well, we're watching closely, of course, whether or not Iran is going to retaliate and what that retaliation would look like and how the U.S. would then respond in kind. Now, our analysts at Bloomberg say that there's a sort of 3 different ways that this could go. Iran could have a more targeted response and call for a ceasefire, more targeted response and no ceasefire. That's something that this White House would probably be looking at more closely, since President Trump has previously indicated he wants to see what he has called unconditional surrender, something that Iran says is not on the table. Then the last way would, of course, be a much greater escalation, and that could look like Iran targeting key energy infrastructure in the region, U.S. Troops and interests, but then also, as you've been discussing on the program this morning, any sort of action against the Strait of Hormuz. Now, the White House has said that they have been proactive when it comes to protecting U.S. troops and interests. As you well know, they moved personnel out of Iraq last week as one example. So we're watching really closely here how rhetoric could heighten on that that end. And then also as we wait to see what the full damage assessments look like and whether or not that could spur the U.S. to strike again in a bid to try to inflict even more destruction or damage. Of course, Danny, as you well know, this White House has been touting that the damage was monumental, but U.S. officials have also confirmed that it is going to take time to see the full extent of everything that happened at these nuclear sites.
Well, Dan, to that point, part of the thinking behind the timing of these attacks, both on the Israeli side and the involvement of the U.S., was that it was a weakened Iran, an isolated one. What do we know about possible retaliation from the Iranians and just how limited some of their capacity to do so might be?
Well, to hear the Israelis tell it, their capacity is being whittled down hour by hour, day by day. That would potentially appear to be supported by the changing disposition of their retaliatory attacks on Israel, which continue. However, they're using fewer missiles. In fact, today there were 3 volleys in quick succession, but only a sum total of some 15 missiles in those volleys, effectively isolating Israelis, forcing them down to shelters for 30 to 40 minutes. That was unprecedented duration. Apparently, that was part of the Iranian plan. They're basically making more of less. Now, when it comes to retaliation against the United States, I'm not sure the Iranians are going to be in any rush to poke that bear, be it an attack, say, on a U.S. base in the region. Even closing the Strait of Hormuz might invite escalation with the United States, with an administration that might actually prefer to see a line drawn under its participation. It brought in its unique aircraft, its unique bombs to carry out an attack that the Israelis could not carry out in terms of their capabilities. And I think, especially to judge by the hyperbole, if you like, or the absolutist rhetoric on the part of the president, on the defense secretary, about having done the job, having destroyed, obliterated, conducted monumental damage, it would appear that the Americans want out, having gone in. And the Iranians may be aware of that and may actually factor that in when they decide if and when to retaliate against U.S. interests.
Tyler, Americans might want out, but there seems to be some mixed language on what Washington's goal here is, whether it be a disarmament of nuclear capabilities or regime change after hearing from the president. What are those mixed messages we've been hearing?
Yeah, so Danny, yesterday we saw a flurry of posts from President Trump on Truth Social, but one that really got a lot of attention was that he said it's not politically correct, in his words, to call for regime change, but that if Iran is not able to make Iran great again, of course, a play on his campaign slogan, Make America Great Again, then why wouldn't they call for regime change? We should say that U.S. officials and Israeli officials have said that that is not the goal here, and that the goal ultimately is to dismantle Iran's nuclear program and their ambitions going forward. In fact, President Trump's comments were directly contradictory to his vice president, who earlier in the day said that they were not at war with Iran's regime, but instead with its nuclear program. We should say it's really not clear what sort of circumstances President Trump would need to see in order to get behind regime change. And our analysts at Bloomberg say that even if there was a targeting of political figures in Iran instead of what we have seen to be the military figures, there is a line of succession here, and it's not totally clear if there would be regime change. Of course, this is a very highly volatile situation and a lot of moving factors. But it was interesting to see sort of the dynamic play out, since we had not seen President Trump signal that as of yet.
Tyler, Dan, thank you so much for your excellent coverage this morning. Bloomberg's Tyler Kendall in Washington and Dan Williams in Jerusalem. Now, let's get the view from Wall Street. Kathy Jones of Charles Schwab writing, uncertainty means less easing and a steeper yield curve. Layer in wars in Europe and the Middle East, and the potential for higher energy prices, along with the outlook for the economy, suggests a potential growth slowdown and higher inflation. I'm pleased to say that Kathy joins us now. And Kathy, this is, of course, something you wrote over the weekend, because there are a lot of uncertainty even before you add on what happened in the Middle East over the weekend. It's been a very muted market response. What do you make of that muted market response?
Well, hi, Danny. Good morning. I'm a little surprised there isn't a bit more long-lasting response, but as your coverage indicated, people may simply be waiting to see what the next step is and react to that. And indeed, in my lifetime, there really hasn't been peace in the Middle East. So I guess markets to some extent are inured. If it doesn't disrupt the flow of oil, if it doesn't close the Straits of Hormuz or create some sort of economic effect in the near term, then markets are going to take it in stride. But I do think that we're still all sort of nervously watching the situation, trying to assess what the longer term impact will be.
If we attempt scenario analysis, Kathy, and we decide or we game out a situation where the Strait of Hormuz is closed or oil is seriously disrupted, what is your assumption on where we go from here?
Well, I think we get that steeper yield curve. And in fact, everywhere I look, I just see risk premia rising, right? We just have so many things going on right now that are disruptive to the economy, that are negative for the budget outlook, that could boost inflation from where we are and limit the Fed's ability to lower rates. So I think that we see higher risk premiums, particularly at the longer end of the curve, maybe somewhat in corporate spreads. We haven't really seen much response in corporate spreads, but you could see some expansion of spreads there. It's just, it's very hard, I think, for markets to dive in at this stage of the game, for investors to say, okay, you know, path is clear. I'm going to take on duration risk. I'm going to take on a lot more credit risk. I think there's just a wait and see attitude. And if things deteriorate from here or get more complex, then you'd want to see, you'd want to have a higher risk premium to compensate you for those risks.
Kathy, what happens if we don't get that clarity? I'm even thinking about the next couple weeks, how much risks there are around the one big beautiful bill in Washington, D.C. That self-imposed deadline comes in July. You also have the self-imposed deadline of tariff discussions. That comes up at the start of next month, too. If we don't get clarity on these issues, do we just continue to see investors on the sideline? Does it become something of a frozen market for the rest of 2025?
Well, I'd say it's sort of a range trade in the fixed income markets then. Yeah. We've had volatility early in the year in say the treasury market and in fixed income markets in general, but now it's settled into kind of this sideways range where you're reacting, you get 10 basis points in either direction, but always coming back to, say, on the 10-year, 440, 445, just kind of bobbling around here, waiting for some clear direction. And I think that we could see somewhat of a frozen market in that sense where, you know, if you're an investor, you just want to stay in some safe zone without taking on too much risk until you have something to hang your hat on. And unfortunately, most of the risks that we're looking at are negative for the market. So as you mentioned, the budget bill could certainly boost deficits and increase supply. Perhaps disruption in the Middle East could boost inflation via the oil market. But at the same time, the credit markets have to worry about what impact that has on trade, corporate profits, et cetera. So I'm not surprised the market's just sitting here on edge waiting for something to hang its hat on.
Well, Kathy, we really appreciate your time this morning as we sit and we wait. Kathy Jones of Charles Schwab. Let's get you some other top stories now that are trending on the terminal this morning. Ukrainian President Volodymyr Zelensky says that he will be visiting the UK today. Zelensky made the announcement following an overnight Russian attack on Kyiv that killed at least 6 people. In a post on X, Zelensky said he will be negotiating new and powerful steps to increase pressure on Russia. Bank of New York Mellon approached Northern Trust last week expressing interest in a possible takeover. The Wall Street Journal reporting that the chief executives had at least one conversation, though the banks did not discuss a specific offer. Representatives of BNY and Northern Trust both declined to comment. And Tesla's long-awaited driverless taxi service launched on Sunday, but only to a few riders. The first robo-taxi trips were limited to a narrow portion of Tesla's hometown, Austin, with an employee seated in each vehicle monitoring the journey. Initial riders featured investors and social media influencers who live-streamed their trips. Oil traders watch for disruption in the Strait of Hormuz. We'll look at risks to crude flows coming up next. We'll have that on your Bloomberg Brief.
Well, I encourage the Chinese government in Beijing to call them about that because they heavily depend on the Straits of Hormuz for their oil. If they do that, it'll be another terrible mistake. It's economic suicide for them if they do it. And we retain options to deal with that. But other countries should be looking at that as well. It would hurt other countries' economies a lot worse than ours.
U.S. Secretary of State Marco Rubio on the critical role of the Strait of Hormuz. Oil spike, meanwhile, faded as traders await Iran's response to the U.S. attack over the weekend. Joining us now is Bloomberg oil strategist Julian Lee. Julian, how should we be thinking about the risks to the oil market at this point?
Well, I think there's lots of things that Iran could do to disrupt the oil market, should it wish to. I think that's something we have to get out there, that Iran may decide that the oil and gas markets are not something that it wants to tamper with at this time. In terms of the flow of oil, it could do what the Houthis have done in the southern Red Sea and start targeting ships passing through the Strait of Hormuz with missiles or drones. That would absolutely raise the degree of concern among ship owners and crews. It may well stop some ships from going into the Persian Gulf. We saw overnight two tankers U-turn as they were in the Strait of Hormuz and head back out again. One of those has turned back again and has now gone through into the Persian Gulf. But that shows, I think, some of the worries that there are. I don't think Iran would ever be able or want to close the Strait of Hormuz if that were possible to all shipping, but it could certainly raise the threat level and raise the level of worry among tanker owners and operators.
But if there is a level of worry, if you do get more tankers that do U-turn after U-turn, Julian, if you see insurance costs rise, surely that would have some impact on flows, or not even, because again, oil markets over the past 2 days, trading days, are actually down.
Yeah, I mean, yes, it would have an impact on flows. And I think the oil is down because people are not building into their sort of baseline forecasts a closure or a significant disruption to oil out of the Persian Gulf. I mean, if Iran did start to do that, there would certainly be a reaction from the US and likely from other people too to get the flow going again. I mean, you look at the bombing raids and the missile attacks that were launched against the Houthis, you would see something very similar and probably on a larger scale if Iran tried to do that in Hormuz. There are, of course, large stockpiles of oil around the world. That would help to mitigate the impact of any short-term disruption to oil coming out of Hormuz. But if that threat level is perceived by traders to rise, then you will see oil prices going up, and that will have an impact on inflation and on economic growth around the world, depending on how long it lasts.
Julian, thank you so much for your time this morning. That is Bloomberg oil strategist Julian Lee. Now, the U.S. attack on Iran is also disrupting global aviation. British Airways and Singapore Airlines canceled flights to the Persian Gulf. Emirates suspended flights to Tehran, Baghdad, and Basra until June 30th. Other airlines are rerouting flights. Joining us now is Bloomberg's head of global aviation coverage, Benedict Campbell. Benny, how severe is the disruption at this moment?
So we are seeing more airlines that are suspending flights to the region, and principally to places that now include Dubai and Doha. And these are two really major global aviation hubs. So we've heard from British Airways, we've heard from Air France. Singapore Airlines is also cancelling flights for the next couple of days. What's significant about this is that Dubai in particular has long been sort of an island of stability in really a region that has seen so much disruption over the last couple of decades. And they've sort of built this sense of stability, economic and political and otherwise, around that sense. And for that to now being called into question by airlines, but also some companies that have started pulling employees out of that market, that is a serious escalation. We'll see how things turn out in the next couple of days, but this is a new situation, no doubt, because so far we had seen airlines avoiding Israel, we had seen airlines avoiding the airspace above places like Syria, places like Iran and Iraq, so that corridor. But for this now to stretch into Dubai and then Doha, that really is a new quality in this conflict.
Well, we had also seen when Russia attacked Ukraine, the avoidance of that airspace and airlines having to take longer routes, higher fuel costs, not to mention the threat of higher oil disrupting fuel costs. Benny, is this a period then where margins seriously come under pressure?
Yes, you're absolutely right. This is going to add a couple of hours in some cases to long-distance flights. If you go from Europe to Asia, you now have to route through Saudi Arabia or take the northern route through Afghanistan, which also to some airlines is not particularly appetizing. So the options are becoming more slender by the day. The Russian airspace, the Ukrainian airspace, we had the Pakistan and India conflict that again closed that space for a while. So it's becoming harder by the day almost to navigate these routes, and that's not making it any easier for airlines. There's also this sense that if you want a growing and a thriving aviation industry, you want people to feel good about these trips. So this disruption, that's certainly not helping.
Benny, thank you so much for your time this morning. Bloomberg's Benedict Campbell. Coming up, data and Fed speak on deck. We'll have your trading diary for you next. This is Bloomberg. Let's get you set up for your trading day on this Monday. U.S. PMI data that will come at 9:45 a.m. New York time, then followed by existing home sales at 10 a.m. We'll also have some Fed speak throughout the day. Goolsbee, William, and Kugler, all of that ahead of Fed Chair Jay Powell's two-day semi-annual testimony on Capitol Hill. That begins tomorrow. Some individual movers for you. Occidental energy stocks are rising, even though that oil jump has faded after the weekend. Tesla, those shares up 1.3%. We had that robo-taxi reveal in Austin over the weekend. Finally, Northern Trust up 4.6%. Wall Street Journal reporting that BNY Mellon had approached the firm with a possible takeover interest. As we head to the end of the hour, let's just take another look at what oil is doing this morning, because with a range of outcomes of what happens in the Middle East virtually unknown at this point, we are not pricing them in. In fact, at one point this morning, oil turns negative. We are bouncing back, but we are only up 0.5%. Indeed, over the past 2 days, 2 trading days from where we closed on Thursday, we are actually lower, currently trading at just over $77 a barrel. That is it for your Bloomberg Brief. Surveillance will take things from here on Bloomberg.